Hello and welcome to this short video which should serve as an introduction to trading commodities for XTB. So if you go to the XTB homepage here and click in login on the top right, you can select xStation 5, which is our proprietary trading platform. Normally you'd be prompted here to enter your password, but as I've done this already, you can see we come straight through and this is xStation 5's. Now if we want to look at commodities, if you go on the watch list on the top left hand side here and select commodities, you can see there are 5 subcategories underneath this. We have agriculture, energy, industrial metals, precious metals and other, which are largely bonds. So we'll start off by looking at agriculture. If you click on agriculture here, you can see these are the markets that we offer under this, and you can see these are the daily changes and also the bid and the ask price. This is the price you can sell this market at or the price you can buy this market at. If we turn our attention to cocoa, you can see cocoa for instance here. Once you click on the instrument itself, you can find out more information by using this I function. If you click on that, that will tell you more information about the cocoa contract, including the hours that are traded, the daily change, the weekly change, the monthly change, and also the market sentiment. Now this is the percentage of XTB clients that have long positions in the market, 79.4, and short positions in the market, 20.6. If we want to chart this market, you can see we can create a tab. So if you've got a commodities tab here, and then we can just take this market and we can drag it across, and you can see now we have the daily chart for cocoa. In terms of looking at this market and to analyse cocoa, you can see there's been some support we had previously. So this is a daily chart. There's support around these lows, around 1755, and we're currently moving up towards the top of the recent range. You can draw a horizontal line from here, horizontal line from point, and you can see these highs around this sort of area, around 22.15. So for the last year or so, the market's been consolidating in a range, and we're just moving up towards this potential resistance area around 22.15. Now, if you want to enter a trade, bear in mind this is a demo account, so this is obviously not an actual live trade, but if you want to enter a trade, you simply select your contract size here. So let's just say 1 lot, so that's 1 CFD in cocoa, and then you can buy or sell. So if you want to buy, simply click there, and you can see you get the notification, added position, bought 1 lot of cocoa. Now this trade straight away populates down the bottom. This is how you manage your open positions. You can see the information about this trade, buy, the size, the opening time, the opening price. A stop loss, if you require a stop loss for your trade, which is something I'd always recommend, you can enter your stop loss here. You can choose the level. That will tell you how many pips away you are and how much in pounds you'd lose if that stop loss is here. Click apply, you can see the stop loss comes in below. If you want a trailing stop, you could choose a 100 pip trailing stop like this, and you can see you'll have the market come down here and you have this little star. This means it's a trailing stop. So if the market does move in our favour, this will move in and follow the market higher. In terms of take profits, you enter those exactly the same. If you have a level you want to take profits, to say we think this market could come up to close this resistance, but we don't want to try and hold it and see if we can break through. We just want to take resistance near here. You can maybe go 21.95, and you can see that would give you the size of the move higher and also how much in pounds or in pounds and pips that you'd make on this trade. To exit the trade, you just simply click this X here. To reverse the position is this function here. To double up on the trade is this function here. You can see now the market has just ticked in our favour and this trailing stop loss has moved up to 20.47. We'll just close that trade for now. There's another way you can set predefined levels for your stop loss and take profit if you use this tab here. You can see for the stop loss, for instance, if you go minus 100 and take profit, let's say 300, so a 3-to-1 risk reward ratio. What this means is that every time you enter a trade in cocoa, as soon as you click buy or sell, you'll get those stop loss and take profits put on the trade. So another way you can enter the trades, if you go up here, again buy and sell, you can see this stop loss take profit is highlighted because we have those preset functions and the contract size is here. So now if we were to say buy again, you can see straight away the stop loss is 100 ticks below the opening price and the take profit goes to a default setting 300 ticks above price. So that's another way you can enter the trade, and also a way if you want to have a predefined distance to your stop loss and your take profit, how you can enter those. So again, we'll just close that so it doesn't confuse us. So as well as cocoa, is obviously coffee, soybeans, corn, wheat, sugar and cotton. So that covers the agricultural element of the commodities that we offer. We can now look onto energies. Now energies are amongst our most popular traded markets in terms of commodities, in particular oil. So we have two types of oil. We have oil here, which is based on Brent crude, which is seen as a European benchmark for the price of oil. We have oil.WTI, which is seen as more of a US benchmark. Another way you can get the chart to come up on this side rather than dragging it across as we did with cocoa is to click on this plus function here. If we say go on oil now, you can see oil commodity. You can just hover over this I if you're unsure and it will tell you what the contract's for. Then if you click on that, it will populate and come up. Now the oil market's been in quite an interesting situation. We've had a strong move higher over the last 6 or 7 months, then we had a sharp drop just recently. One possible setup which could be forming in this market is a potential head and shoulders setup. Now just to talk you through what a head and shoulders setup looks like. First off, you need a break higher and a prevailing trend. You can see we had this move all the way higher, and then when you break above previous resistance and then make another resistance, that acts as your first shoulder. So we can use this text function here just to identify that, and we'll identify this shoulder with S. Now the second part of this head and shoulders reversal formation, which could be forming, is a move above the first shoulder. You can see we had a strong move higher here, and the market made a higher high. So you can see we take the highs from up here, and now this serves to act as the potential head in this setup. Again, we'll denote this with just shorthand H. Now, once the market has made this head and the shoulder, if you're looking for this formation to develop, you'd see it fall back all the way but hold previous support. So this is around 61.20. This is called the neckline. If we put the neckline on here, you can see we can draw it like this. Now the neckline is subjective, and obviously different traders or analysts will take different areas for the neckline. So that's why I've put a question mark here. But this is a possible neckline for this formation, and then what you're looking for if this formation is to come to fruition is a second shoulder, which we could be getting just here. Now the second shoulder can lie anywhere between the neckline itself and the headline, but ideally you'd like some sort of symmetry and some sort of comparable level to the first shoulder, which we've actually had quite a nice version of here. Now if you're looking to trade this, what you do is you normally watch this develop, so you're not looking for trade entries all the way throughout. Your trade entry signal is a break of the neckline. So if we get a clean break below 61.22, that would then trigger this, and then we could expect a potential larger move lower. So this shoulder here, I should also, I suppose, put a question mark because this is still potentially forming. We don't know what's going to happen. The market could continue higher, and we could get a second shoulder up here around 67, or it could drift lower and retest this level. Now in terms of targets, if you have a profit target for this level, the typical way to take the target is the distance from the head to the neckline and then project it below the neckline. So you can see this is 952 ticks, or $9.52, the distance from 70.74 minus 61.22, and you can see that would give us a level below, or 61.22 would be 60.70. 51.70 if my maths is correct, and this would be a potential target. So this is obviously a longer term setup that we have on a daily chart, but you can get smaller, shorter term head and shoulders forming. So that is something from classical charting which some analysts and traders look for when identifying the market. Obviously, if you use shorter time frames, H1 or M30, you get more of these setups. It's quite rare that you get the longer term setups like this. Turning our attention to industrial metals, which is the next one along, you can see we have nickel, zinc, copper and aluminium. We'll just look at copper for now. So another way you can chart this, the third way really, is to click on this open chart there. You can see copper. What we've had really is strong move higher, and then the market's been kind of consolidating. So we had this strong breakout from these highs here, around 61.56, but the last 6 months or so, the market has really been drifting higher, but it's not been in a strong trend higher, I wouldn't say. We have had a series of higher lows, as you can see by drawing on a trend line, and also higher highs. This trend line is not quite so clear. a series of higher highs. So you could say the market is still in an uptrend, but it's not been a very fast and rapid move higher. You can see we're kind of in this channel, and at present we're sat towards the upper end of the channel possibly, but it's not really close to support or resistance from a longer term perspective. Okay, so moving on from industrial metals to precious metals, alongside oil, I'd say the other most popular market for our traders is gold and silver, in particular gold, out of commodities that is. And you can see gold here has fallen down to 13.28. We're slightly lower on the day, but if we open up a chart of gold, you can see we've had some interesting situations here. Now, going back to the head and shoulders I was talking about with oil, there could be an inverse head and shoulders, so that's the opposite setup occurring here in gold. So if you see here, this is a weekly chart. What you have is a low that was made towards the end of 2015, which is a possible head. So again, we'll denote this with H. You can see we have a shoulder forming around here. Now again, there is some subjectivity. The shoulder is not too important in this sort of setup. You could take the shoulder here, you could have the shoulder here, you could have the shoulder here, but the shoulder is not very important because it's not how you calculate the profit target, and it's also not what you look for your entry signal, so don't get too hung up on where the shoulder is. We could have this second shoulder here, for instance, and then, like I say, the all-important neckline. Now, in terms of trading this, it's nicest if you have a sort of horizontal neckline. So if you took a neckline from around here, 1388, that would be nice and clear. If you got a break above it, and then you could say that's a strong move higher, this triggers this inverse head and shoulders setup. You can see with a head at 1045 and neckline at 1348, we have 340, 343 ticks from low to high, and that would obviously target a long move and a big move to the upside. Whilst it is nice if you have a horizontal neckline, as you can see, it's probably a little bit more accurate to draw this with a falling neckline. So you can see we have this falling neckline here. This covers these previous highs a little bit more closely, and if you are trading off a falling neckline, what you take is the distance from the head to the point that that neckline is broken. So once it breaks above this neckline, or if it does break above this neckline, I should say, that is then the level that you take the market from. So for instance, now if we look at the market and say the falling trend line is at 1350, if we get a break above 1350, you could say that triggers the setup, and then you have the 305 ticks from 1045 to 1350. If you project that above, that would give you 1655 as a possible target. Now, whilst this may seem like very ambitious and long-term a very big move you're looking for, you can see going back previously the market has been far higher. We peaked out around 1900 here back in 2011, and if we do get a breakout after this multi-year sort of rounding bottom, then it is entirely feasible that we get quite a strong move higher. Commodities were actually one of the first asset classes where technical analysis was employed because they found that long trends can persist due to fundamental factors surrounding the commodity. So for instance, here you can see in oil we had a very nice long uptrend from that lows back in the 40s all the way to the high in 70, over around 6-7 months, very clean straight uptrend. So technical analysis can work particularly well for commodities sometimes. Finally, moving on from precious metals, if we go on to the other, you can see these are, like I say, mainly bonds. We also have EMIS, which is an emissions quota, which you can trade. We have the Bund 10-year, which is a German 10-year bond, the Schatz, which is the 2-year German bond, this EMIS, which is, if you do this, you can see is the contract for CO2 emission rights quoted on an organised market. And then also we have the T-note. The T-note is probably the most widely traded of these. This is the 10-year Treasury from the US. You can see we can try charting that now. This has had fairly big break lower recently. So you can see we're actually at its lowest level since around 2011. So this is a significant break, and you can see we had this major resistance level, major support level around 120, 190, 122. And after we got the break below that, you can see we've really accelerated to the downside. In terms of other areas to look for, you can see we have quite a lot of downside to go, possibly, if this market continues lower, and it is quite clearly in a downtrend. There's different ways to identify a trend, as I've said in previous videos regarding indices or FX. But if we look, for instance, at the daily, and we put it on like this, and we say take a very simple 200-day SMA, which is probably the easiest long-term trend identification technique you can use. You can see we've been below this 200 SMA now for quite some time, going all the way back to last October, and the market's actually getting further away. So this SMA has turned lower. You can see we're actually pointing down. This is suggestive that there could be further downside ahead for this market. With that support, when it was broken around 122.20, you can see we retested, had a big rejection with this inverted hammer candle, and another level to possibly look for if I was to analyse this market would be the recent low. If you're looking for support and to go counter trend, go long this market, positive price action around 120 you could say would be an entry signal. But if you are looking to go counter trend, you need to be very tight with your stop losses and not let a loss run against you. So you'd have a stop loss tightly below the 120 area. I think that pretty much covers everything for commodities. So thank you for listening, and best of luck if you're trading this asset class going forward.